The moment we believe success is determined by an ingrained level of ability as opposed to resilience and hard work, we will be brittle in the face of adversity. Joshua Waitzkin. Don't be brittle in the face of adversity. Instead, 10 to 15 minutes a day, it will teach you resilience and hard work. You can work hard for 10 to 15 minutes a day. In fact, in your job, you probably work hard for hours. We ask 10 to 15 minutes, no matter how tired you are, no matter how bad a day you had, we want you to be with us to learn this. I'm telling you, my friends, it is amazing if you will just practice trade. We have for you today, for all of our subscribers, in the show notes. If you're not a subscriber, go to chartingwealth.com and sign up. Otherwise, you won't get any of these special daily trainings. This is how to use our trade worksheet. If you notice in your show notes every day, there are PDFs that are available for download for free. They are the trade worksheet, daily market worksheet, weekly market worksheet. Start with the trade worksheet. Use it every time you do a practice trade. And when you get into fractional shares, and again, we have a training on that. I think I'll put that out tomorrow for you. So sign up so you can get that. If you're already a subscriber, look for it. That's what you do after paper trading, but you still fill out your trade worksheet. That is your almanac, your trader's notes. It is the stuff that you will use in the future to help you. It will accelerate your learning. It will give you a record of what you've learned. It will help you note the mistakes and the things you did that were smart. So please use the trade worksheet every time you do a practice trade. Let's jump into these charts. Everything up for the day on all of our charts, except for real estate, down a little bit. That's on our last three charts. But our big four charts, everything up. I don't think that's healthy. But again, that's what everything's doing. We see the S&P 500 up 0.81%. Have a green up candle reaching a higher high. Nice size candle so far. First day. Look at how straight for going on 4 weeks now, actually 5 weeks. We're going into the 5th week of look at how straight up with no change that price percent oscillator is. Derivative oscillator, again, has been about flat going on 3 weeks right now. That's good to see. We go from the weekly to the 2-day. Remember we had that 2-day crossover? Buy-in point, and again, I'm using the Heikin Ashi candlestick, somewhere around the 318 mark. How high have we gotten? We've gotten up to 325.13. Is that not beautiful? Is that not beautiful? In the course of just going into the 2nd week, that is a very good 2-day recross. That's what we call that. The 2-day had gone against the weekly. So of course, you don't want to stay in when something like that occurs. You may have very well gotten yourself out, depending on your skill set, much earlier than the 2-day crossover. You don't have to wait for that. But most definitely you hop out at that point, if not before. And then look what happened. It recrossed, which gave you the opportunity, again, at the close of the 2-day candle on Tuesday. It represented Monday and Tuesday, the 13th and 14th of July. Gave you a recross going back in the direction of the weekly. And so far, so good, my friends. What's going on the half-day chart up in the morning? And then the big gain in the afternoon, price percent oscillator ticking up higher, derivative oscillator gaining upward momentum, looking good. Now, where we really see the 2-day recross shining is in the Qs. Look at that, at least for the day, up 2.84%. It did peak earlier on the week ending the 17th of July, but it's a trying. Again, not as big a candle. It is a bigger candle. The candle body is higher than the prior week, but we aren't reaching a higher high yet. Maybe it will happen, but we see a concern in the 2-day chart. We'll talk about that in a minute. And if you look, we can see sort of consistency there, not going up at the same angle that it had been prior to the week ending the 10th of July, but we're seeing a continuation on the week ending the 17th of July. Price percent oscillator losing a little bit of energy, but derivative oscillator losing a little bit of energy, but that price percent oscillator heading up. And we see, as far as the 2-day candle goes, we can see that, of course, it has ticked over, pulling away from the red signal line. It was going down. That's good to see. Price percent oscillator is about flattened. So again, this candle representing Friday and Monday is again up, not reaching the high that it had back on the 2-day candle representing Monday and Tuesday of last week, but it is going up. And again, it is below the prior 2-day trend line, but it's a trying. It's at least trying. Now let's go to that 4-hour chart. What do we see there? Up in the morning, pushing through the Bollinger Band. I'm sorry, not the 4-hour, but the half day. It's 195 minute. That's what our TC2000 chart allows us to cover. And it's getting close. Hopefully it'll be another up day on Tuesday, and then we'll peg it for that crossing over 2. And then we'll be able to redraw the 4-hour trend, or the trend line. Old habits die hard. So that's what we're looking at on the cues. What about 20-year bonds? Well, going into the 1, 2, 3, 4, 5th week of up movement, but look, that price percent oscillator is just still flat going into the 4th week of flat, not crossing the red signal line going up. Derivative oscillator, however, is continuing to lose momentum. Go to the 2-day chart. What do we see there? Well, of course, the 2-day chart crossed over going up back on June the 26th. It then went down for 4 days of decent, strong down movement, and then popped back over and has been going up since then. Again, the problem we have is the weekly's down, the 2-day is up. That means we don't have a trade when those are in conflict. We wait for one or the other to cross in the direction of the other one. If the 2-day crosses in the direction of the weekly, that's called a 2-day recross. If the weekly crosses in the direction of the 2-day, that's called a weekly vertical crossover. That's our big kahuna. That's what we look for the most. Half-day chart on bonds shows us up in the morning, pulling back some in the afternoon. Again, only up 0.25% for the day. Back to the weekly and to gold. What do we see going on with gold? Up 0.48%. And again, gold, the high throughout the course of the day, 171.07. Have we reached that high before? Oh, no, we have not. So that's good to see. And we see the price percent oscillator continuing to slowly pull away from the red signal line. Derivative oscillator gaining upward momentum. 2-day chart, again, had been heading down, sort of stopped that. Green up candle, which is good to see, representing Friday and Monday. Derivative oscillator still losing some momentum. We go to that half-day chart intraday. We really reached our high in the morning and lost a little bit in the afternoon. Looking to see if that's going to cross over going up, the price percent oscillator and perhaps a derivative oscillator at the same time. We'll see. But on that 4-hour chart, price is above the 2-day and below the weekly. So we'll continue to watch, see what we see there as things continue to develop. But that gold trade is doing nicely. Again, on that weekly vertical crossover all the way back on Friday the 26th, jumping in point somewhere around the 165, 166 mark to a high of 171.07. Pretty decent, my friends. Pretty decent, particularly after it failed us there, the only failure we've had for the year. And that's out of 13. It was when it crossed over going down on the weekly vertical crossover and faked us out. Do you know how rare that is? That is extremely rare. That's why we pay attention to our weekly vertical crossovers. Does it work every time? Nothing in the market works every time. Has it been working for us this year and last year 90+% of the time? Yeah, that's why we love our weekly vertical crossovers. Our 2-day recrosses, not as accurate, but again, track them. Track them, study them, practice them. Keep your notes. That way you'll know what charts they work on and what charts they don't work on. That's why we say you have to practice. If you're just tuning in here every day and listening to me, trying to glean a few things and become an expert, then you are wasting your time. You don't need to do that. You need to go somewhere else. If you're really serious, you need to tune in here every day. You need to print out those trade worksheets, daily market worksheets, weekly market worksheets. Listen to all the trainings each day, 10 to 15 minutes. That's all we ask. Folks, we're done with the 4 big charts. If that's what you tuned in for and you're not interested in oil, real estate, or Bitcoin, thanks so much for joining us. If you hadn't purchased our book, buy it. If you want to help us in our quest to spread this knowledge, then you need to be a Patreon supporter. Follow the link in the show notes. And by all means, subscribe to our YouTube channel. And of course, if you want to get our trainings every day, go to chartingwealth.com, sign up for the daily market review. Let's jump into Bitcoin, up 0.35% for the day. But look at what's happening on the price percent oscillator. It's crossing over, going down, showing you where that oscillation is going in a red candle forming. Derivative oscillator gaining downward momentum, even though it's up for the day. That's what our oscillators show us, particularly the price percent oscillator. Look at the latest candle. It's not as low as the prior one, I don't think. Let's see what the low was. 9141.39 as opposed to 9,099.22. So again, not hitting a lower low yet on that 2-day chart. Price percent oscillator heading down, derivative oscillator about flat. Is it going to push through that 200 period moving average line? Will that have any significance? Don't know. We'll see. We look at where things have bottomed and trying to move up in the morning, a little further up in the afternoon. Again, it was only up 0.35%. But we'll pay attention, particularly with that weekly vertical crossover going down. 2 days already down. If we end the week with that, then of course that gives you the opportunity to jump into a short position in your Bitcoin practice trade. So keep that in mind. If you're interested in charting Bitcoin, you need to be following this on a daily basis. You need to be marking up these charts with your 2-day crosses, your weekly crosses. You need to be putting in your trend lines. This is something for you to practice, just like we do on our big charts, the S&P, the Nasdaq 100, 20-year bonds, and gold. Now, let's move on to real estate. What do we see in the Vanguard Real Estate Investment Trust Exchange Traded Fund? Down 1.19%. We see the price percent oscillator flattening. We are seeing a second down candle in the formation right now. We look at the 2-day chart. It's been down for a while. And of course, we've got a red spinning top, means indecision tending down. Derivative oscillator losing downward momentum. Go to the half-day chart. You can see some indecision in the morning and then a plunge in the afternoon. I say a plunge. Downward movement in the afternoon. Hasn't crossed over going down yet. It's where we are on real estate. So let's just continue to watch. You may have a chance to short real estate if and when that weekly chart crosses over going down. Now let's go to oil. It was the smallest gainer for the day. It was up, but just barely 0.07%. 0.7%. Not up much, but of course we had that weekly vertical crossover back at the beginning of July. And of course it has continued to move up somewhere around the jumping in point at 28.31. What's the high it's reached? 29.50. Let's see, 29.25. Okay, so again, it's pulling away slowly but surely from the red signal line. That is the price percent oscillator. Derivative oscillator peaked 2 weeks ago and is moving down. What do we see as far as the latest 2-day candle? Red spinning top after a green up candle and 2 prior red spinning tops. So again, some indecision there, but trying to move up. Price percent oscillator on the 2-day charts moving up ever so slightly, being tracked closely by the red signal line. Derivative oscillator losing upward momentum. Remember, that derivative oscillator is a triple smooth version of the relative strength index. It's showing us that as far as upward movement in price, it is slowing down. That is what that tells us. When you see it going further and further red, it's showing you that it's gaining downward momentum. So we're seeing that the upward momentum is slowing. It's slowing. Doesn't mean it's rotating over yet, going down. It just shows you a slowing in the increase in price movement. That makes sense. That's why we use it. It's a leading indicator as opposed to the price percent oscillator, which is a lagging indicator. It is a percentage version of the moving average convergence divergence indicator. So you want to know more about these things? We got a great book. Got a great book available. Follow the link in the show notes. If you live overseas and want to buy it, email us cw@chartingwealth.com. We'll send you a PayPal invoice. Pay it. We'll get that book to you wherever you are in the world. Lastly, we look at the half-day chart. We see oil plunging in the morning, but recovering in the afternoon just a little bit. Price percent oscillator heading down. Derivative oscillator went negative in the afternoon due to those downward oscillations, just like I was talking about in price. So that's where we are, folks. So glad you were with us. Hope that you're getting the most out of this, that you're going to spend 10 to 15 minutes with us a day, every single day. Don't miss it. Don't let these stack up. Find the time. If you have to stay up late, get up early. Spend part of your lunch hour. It's worth it. God bless. All the best from the whole team at Charting Wealth World Headquarters.